19th, and it's 9:36 a.m. in London when we're doing this daily market update here at Investing Cube and on ATFX YouTube channel. And if you're new to this is a daily market update we host Monday to Friday here on this channel and on this webpage. I've been trading since 2006 and can hopefully I will share with you what I think is going on in the markets, the levels I think traders are watching and trading from, and hopefully I can help you and support you with your trading. Now, don't forget to subscribe if you're new to this. It's very straightforward to do so. Just click up here, and then there's a little follow button usually. And if you're in the chat box as well, don't forget to say hello. We have Tim Hollingsworth saying good morning. Good morning to you, sir. I hope you're doing well. If you guys want to say good morning, just click here, and I'll be able to see it in my chat. Okay, let's get going, and we're going to let's begin with euro, right? Actually, let's begin with a normal a bit of a general overview. I think that's always good. We get a bit of an idea what's happening. So we have, just quickly skimming through here, GBPUSD is lower by about 50 pips. Today we'll get the news. I'm not sure exactly when, but it's pretty much a done deal. Boris Johnson will most likely become the next PM, and that's putting pressure on the pound. If he doesn't become the next PM, then probably GBPUSD is going to trade upwards, so we're going to talk a bit about that. Elsewhere, the dollars in general is just doing quite good, really. Good against the New Zealand dollar, Aussie dollar, and euro. Not too many big moves, though. Gold here, I saw that overnight. I was like literally a few cents of being stopped out this morning. So we're going to talk about that. And then in Europe here, a decent move here in the DAX. And I've seen other European stock markets as well being up today. So that's looking interesting as well. But let's begin with the euro. So what's happening right now with euro is that the price is trading at 11.84, and on a break to this level here, which is 18, the June 18th low at 11.81, this market is probably going to trigger a few stop loss orders. In fact, it's probably already done so, and as it trades now below the July 9th and July 17th low, and on the break here, the market could potentially trade lower. And I'm saying potentially because the market overall is trading within a range. But yeah, if you're scalping and stuff like that, you might potentially get a little bit of an opportunity, and maybe you can trade the market down to 11.38 or something like that potentially. And then we'll see, because you see on Thursday we have the ECB rate meeting coming up, and I did an article on that yesterday. So let me share that with you, so you have that. In general, the market is pricing in a rate cut, okay? A rate cut with, not for Thursday, but for a meeting in September. Why September? Because in September, they're going to update the staff projections, which is really their economic forecasts. So what's going to happen at that point is that they're probably going to cut rates with 20 basis points to negative minus 60, 0.60. And the idea here is that right now, with yields across Europe also being relatively low, it's like even the government 10 bar, it's like the 10-year government bond yield, for example, in Germany. See if I can find that. You see, it's at negative 34, right? So it's a negative 34. Now, where's the deposit rate right now in at the ECB? Well, it's at negative 40, right? So why lend out money to the German government for 10 years when you can just put your money at the ECB, right? So the idea is that you cut rates further to minus 60, so then maybe they're gonna not necessarily lift interest rates. That's not the purpose. The idea is to force the banks in Europe to lend out money. And the idea with that, it's just to boost the economy and to get things going again. So here's an article on that. I'll send that to you. You can check it out. I also did a videos on YouTube as well. I have Marvin here as well. Good morning to you, sir. So that's the link to that article. If you want to keep track of everything I'm producing, I suggest you bookmark this link, the second one there. So with that ECB rate meeting coming up, I think it's fair to assume that we'll be within this range, and then depending on what they do, we could potentially have a break or not. Traditionally, the ECB tends to disappoint. They tend to take small steps instead of just going big. A few times they have gone big, but the last time that was, I think it was in 2014 or something like that, when the euro tumbled like this. And maybe with Lagarde, which is the new head of the ECB, that can change. That could potentially change. She was, before the QE and everything here, she was quite vocal that they should introduce QE. And surely, like 6 months, 9 months later, they did introduce QE. Obviously, it's easier for her when she's on the outside at the IMF to say what everybody else is going to say. I mean, that's super easy. But if she's going to have that, and that's the way she's going to do things, then you could suddenly have a far more dovish ECB. And that could be very bad for the euro. I mean, it could weaken with the idea to grow the economy. Anyway, short term, break the low, can probably trade a bit lower. GBPUSD. So it's doing rather well here. So a few days ago, we said look to short here and put stop loss up here. And if I mean, if we never changed the outlook here, in my case, it went all the way up. So I shorted at 124.65, and then I shorted here at 112.40, more or less. 50, I think it was, I don't remember exactly. But because the market went all the way up, actually on the way down, I actually scaled out of that position. But looking at this today, obviously I should have kept that short position. It's bearish, and if you're not already in a position, there's not too much to do here. If one shorted up here, then I think eventually this is going to go lower. I think it's going to go to 120, 121. I still insist on that, especially the way I think the rhetoric is going to go now between Westminster and Brussels. But even if I believe that that's going to happen, we always need to pay attention to the risk-reward ratio and the volatility of the actual market. And with that in mind, I would not short here. I would wait. The way this is looking, I think at least a bit of a pullback to something like 24.90. I think that would be reasonable as a minimum, and then we'll take it from there. If Jeremy Hunt would win, you'll probably have a spike upwards, and then you need to be rather careful with shorting, because I think at that point it might go up and then could potentially take out that trend of funding level. But then again, as time comes, he could also be the one. He will probably be pushed as well to sort of say that they're going to come out with no deal Brexit. And if that's the case, then GBPUSD again is going to start slipping. Here is the dollar versus the Japanese yen. And it's turning into just a mess. So if you look at it from a big picture perspective, we are dealing with a downtrend. There's no doubt about that. If you look at it from this perspective. And then in the shorter term, you even have a more aggressive downtrend, which is this one here. So when the market traded lower, I decided to turn bearish again. But unfortunately, much like the euro, it's not really going anywhere. And it's a difficult situation here now. If one is short, there's not too much to do. Just maintain a bearish position below 108.38. Take that out, will go a little bit higher, but it's not necessarily going to change things in a major way. Gold prices, oh wow, it's starting to get a bit dicey here for bulls. I'm a bull myself. I've been long for quite some time, and I've been piling into this one. And right now, stops and everything are pretty much at 1438.85. Now, I don't trade on the back of the IDC price, so it's not exactly these levels, but it's more or less. So what I'm looking for here in the same levels I mentioned to you guys yesterday. So the trend defining level is this low here. Why? Because you can see the price creating higher and higher and higher and higher lows. So if we trade below there, doesn't mean that the whole thing is going to come down tumbling. It doesn't mean that we're going to go all the way back to square one. but it definitely means that we can take out this level and maybe go down to 1,400, and then maybe from here the market starts to try to create some sort of a base and go upwards. The thing is this though, then the whole thing here would just be sort of quite messy and a bit not necessarily difficult to deal with, but it would just be sideways range really since the beginning of June. It doesn't mean that this long-term view, which I share with you guys, with these targets is gonna be over. Not at all. It just means we might need to go down, and in worst case, if we do go down, I mean, the way things are looking is rather likely, I think, that the Federal Reserve will continue to cut rates. I would guess so, at least. Um, we don't have any sort of trade wars being resolved anytime soon, so I still think we can go upwards. Now, in this situation though, if we trade below this level, it would just mean the end, at least for me, and I would give up on this one. As for this in the short term, you can see that the market sort of just bounced from these levels. And the problem though, we come so close to a stop level, is that usually get stopped out. But I think if I wasn't long already, I think I would give this a shot, because you will have a very, very good risk-reward ratio. However, why are you getting this really good risk-reward ratio? And if the market turns around, why are you getting a 7.17 times risk-reward ratio here? The only reason you're getting that very good risk-reward ratio on a 1 hour chart or a small chart like this is because your likelihood of getting stopped out is very, very high. And because that is high, and it is high because we're so close to the stop level really, then you get these crazy reward ratios. Crude oil, guys, this is gonna be a real snooze fest. It's gonna be so boring, and I think this is just gonna continue to trade sideways. There's no reason to get excited. Looking at this right now, we're within that triangle. The triangle converges here in September 24th. So before that, we should have some sort of a break. The way this is looking, can go up, it can go down. No one really knows. But what I want to do is when this goes down again and maybe creates a high, I want to lift this upwards and then push this lower. And eventually, and hopefully, what's going to happen here is that it's going to be a very, very narrow range, and then we go bullish, bearish. Even though you just need to bear in mind, triangles are very, very difficult to trade. Now, I would not trade on the back of any break to the trend lines, because it's very common you have a break and then it goes up again, and then you have a break and then it goes up. Anything with triangles or with lines like that don't make sense to me to trade. The only sort of trend line pattern I do trade is the head and shoulders. Here's the S&P, and the S&P is holding up relatively well. I mean, I just looking here at the DAX, it's up with it's up with a percent, it's added even more. And I think here we need to be a bit of sort of look at it the other way around, you know. So what is the market thinking? The market thinks we're going to have a recession. So what if we don't have a recession? And what's going on then? Because some of the data coming out has been good so far. So then we have a relatively stable US economy, and then you have a central bank cutting interest rates. I mean, isn't that great for stocks? And that's really why we are where we are here. What should we do? You know, there's so much conflicting issues here. This always, you look online, there's so many different views. And what I like to do, and I think a lot even of the big guys like to do, is that you have your thesis, and some of them are gonna buy a little bit before the chart confirms, maybe a third of the position. But it's first when the chart starts to confirm that they go full in. I'm not saying everyone, but for example, Stanley Druckenmiller, which is a famous speculator since the 70s, early 80s, which used to trade with George Soros and broke the Bank of England and stuff like that. He would buy a third of his position into something that he believes in, and then when the technicals make sense and momentum goes with him, he would pile in. And it's a bit same here. Like, we have all these views that not everyone, but I mean, I've been rather bearish this year, because I was bearish heading into this decline here we saw in December. But until the price here agrees with us, no point giving up just yet. So the idea was to buy at 29.79. This is 29.77. We talked about this already some time ago, and I'm sticking with this. So if we revisit, people probably gonna buy. As for the German DAX, it's doing rather well today, and I think if you look here at the 6-hour chart, actually it's not that difficult. We can look at it from the daily. So we have this longer term trend that we talked about, right? You might even remember that I said that people are going to buy here in beginning of July. Myself, I bought at about 12,340 or something like that. Then the market went up and then it tumbled lower. So the reason for why I bought and the reason why this can turn bullish again is that the big picture trend is clearly bullish. You can see here, creating higher and higher lows. So what we're waiting for here is for this short-term momentum to end. Now, I just put these trend lines here to show you. I don't trade on the back of trend lines. But what I'm looking at is the break to something like 12,462. Now, there are better markets out there to trade and buy than this one. But if we trade above the high here, more specifically, if we get a close above the high, I think that could be the beginning of a push upwards and then lower and then up again. Okay, let's see if you guys have any questions. So I got a question about pound versus the Swissy. I think, okay, let's take a look at it. I think I remember you. I think you asked the same question some time ago. So I don't remember exactly what I said at that time, but this looks rather fresh. If I remember correctly, I think on July 18th, so yeah, probably last week, it was probably you, sir, or maybe someone different that asked about this one. What we're looking at here, what happened since then is that the market moved upwards, right? So it moved upwards, and Fib-wise from high to low, it corrected to the 61.8% Fibonacci level, and then it turned lower, and now we can just lower. So I would lower stops and everything to just above that high. Now, if I was short, because this is the bearish market and it should be shorted, then there's nothing wrong here taking at least half of the position as profit. And if I wanted to short this, because it is a bearish market and we should not kid ourselves that things are going to resolve itself easy in terms of Brexit, then probably, and if you want to hedge your wealth, I guess, if you have a lot of pounds, that is, you're looking at something like this. So this will be 112.92, 122.92. The way this is looking right now is trying to spike lower. I think they're waiting for the announcement. And then if you look at it from a big picture level, this is interesting. So if we get rid of the fibs here or everything, let's put on the weekly chart. And what you can see here is rather interesting. If we take out these levels where we are right now, which is 122.15, then the next major level is down here at 119. And realistically, unless the EU does like a 180 sort of turn here, suddenly become really, really friendly, which I don't think they will be. I think we'll probably be trading down here eventually. Looking at this right now, I don't want to be too much of a doomsayer, but it looks like a massive head and shoulders as well. And that suggests maybe even lower here to something like 109. So I've spoken with some rather sort of experienced guys. They've been training for many, many years, and what they're sort of suggesting or thinking is that we'll have that decline. It will decline, and then you have and these are people that voted for Brexit themselves. They've been bearish and shorting GBPUSD since pretty much that happened. So what they're saying is we'll probably have that decline in the market, and then on the day, if we have a hard Brexit, we might have a big sell-off again, and then after that it will stabilize. And what one guy said was was something that happened in 1982. So that was when the UK was, because it was pegged. Don't remember exactly what the system was called, but in 1892, the GBPUSD, this is GBPUSD, right? But against the German DAX, it was pegged. I don't have a German DAX chart here, but it sort of explains and tells you what's going on here. So the price was at $2 per pound. You had that depegging, and you can see how the market slipped sharply. On those days, the market slipped with 13%, and then it added another 18. So that was a total of 30% decline. And then after that, it stabilized. And then after that, obviously, the UK did good. And hopefully we'll have the same here again. Since the Brexit referendum, around these levels here, the market is down with about 12. We can't compare this with the other one, but probably more bearish, I think. Because this was already going down to the beginning with. And the reason for this is that we're dealing with an economy, and all economies are under some sort of transformation, or they have been forced to transform, right? It's not just the UK economy. Like, look at Europe. Like, it had its heydays in 2007 and so, and you had tremendous change in countries like Spain, Greece, Italy even. So there's been changes across the world, and in the UK as well. UK used to be, and still is, a big finance center, and most of my neighbors work all in finance. I work in finance. You speak with them, all of them tell the same. It's not easy times right now, and what happens is that you have other sectors that hopefully is going to take over. People go to new sectors are developed, and that transforms an economy. But the heydays where you could make a lot of money in a very short period of time with really no education in finance, and if you did have education, even more, that's pretty much over. And we've seen that transformation in the currency. Okay, let's see if you guys have any questions. Okay, so no more questions, so that's all good. So we're gonna wrap things up. Don't forget to hit that like button, and don't forget as well to share the stuff. That will be very grateful. And as well, we publish quite a lot of content here on Investing Cube, and most of it is unlocked. Some of it's not. If you want to join, just click here on join now, and it's free to join. It asks you to sign in. Now I'm already signed in, right? So I can't sign up again. But you put your first name, last name, and email, and then click on this button and continue. It's going to ask you about your mobile phone, and then you're done. You're set. You can read all our stuff, like the quarterly market outlook, and then you can read as well something like the Facebook stuff, and then a bunch of other stuff that we produce. Okay, we're going to wrap things up. Thanks so much for watching, and I'll see you guys tomorrow, same time here at Investing Cube and ATFX YouTube channel. Thank you, and good luck trading. Bye-bye.